Taking into consideration that China says it's ready to help Europe, what impact will the new measures of the European banking system have on the Chinese economy?
You're correct in saying that the Chinese want to help more or less the Eurozone because it's of their own interest. Why? Just to give you a number, 14% of Chinese total exports are going to the Eurozone. This is comparable, let's say, for example, like 4% of Chinese GDP. So that's in their own interest to help the Eurozone by, for example, buying government bonds of the Eurozone companies or countries. And it will also impact it if they're not doing this, the Chinese economy. For example, on the export side, as you may know, Chinese are really export-driven, going over to a domestic-driven economy. So they are, or they could be, negatively affected if they're not helping the Eurozone.
What is your approach to the Chinese market, and which is your opinion on this country, considering the decline in macroeconomy indicators and the decline of the GDP?
We are looking on different trends on the Chinese economy. We are looking, of course, on the macro trends, which for us are very supporting from an investor's perspective. That means we have seen, or we are expecting that we have seen the Q2 numbers of the GDP growth are bottoming out currently due to the fact that the Chinese people or People Bank of China reduced their lending rates yesterday. And we are also expecting further measures to come on the monetary policy side, also on the fiscal side, so that we expect in Q3 GDP should starts to grow again. And that we are looking on the macro perspective, but also on the micro perspective, so that the Chinese market is really undervalued. A lot of investors have gone out of the market, and they're coming back if the GDP stabilizes. And we expect it with the starts of Q3 2012.
As concerned foreign exchange, which will be the development plan on renminbi and China's central bank?
As we have seen in the past, the Chinese always try to make the renminbi more flexible by widening the trading bands in the past, but they also try to promote the further internationalization of the renminbi. For example, they make trade agreements with different other countries like India, Japan, but also Chile recently. And they're trying to establish the Chinese market as one of the global capital markets. Coming back to the currency side, they are also trying to establish the renminbi as one of the world currencies, if not the world currency, by further internationalization of this kind of renminbi. And so we are really, pushed ahead by looking at the renminbi or the currency side, because the renminbi is one part in a very well diversified portfolio, reducing the risk, and by an appreciation trend of, let's say, 3% per year, it makes sense also from a return side.
In China, there has been an increase in property price. Do you think it has been influenced by the large amount of speculative foreign investment?
I don't think so that the foreigners are the reason why they have a property bubble or property problem. I'm thinking more on the monetary policy side, because the Chinese or the People Bank of China flooded the market with a lot of liquidity in the past few years. And coming also from a political standpoint, they're trying to push the Chinese to own their own government or their own apartment. And so both factors putting together, I think they are more from an internal perspective worrying than from an external point of view. But what we have seen recently is that the prices for the average of 100 biggest city in China are stabilizing. So you see that the price pressure in the property market is cooling down, and there's a stabilization in the property prices, which we have seen currently also on the developer side in China.